Today, we're going to dig into a new kind of home loan that, get this, acts a lot like a credit card. It's built for homeowners who are sitting on a ton of equity but feel like they just can't get to their own cash. So, let's break it down.
So picture this situation, because millions of homeowners are living it right now. You've got this amazing rock-bottom mortgage rate, maybe from a few years back. At the same time, your home's value has just skyrocketed, which means you are sitting on a mountain of equity. But how do you actually use that money without refinancing and giving up that incredible rate? You can't, right? It honestly feels like being trapped.
And believe me, this isn't some niche problem. The numbers show that getting a traditional second loan, like a home equity line of credit, can be really, really tough. For one lender, a full 40% of applicants between 40 and 60 years old get denied. And for folks over 60, that denial rate jumps up to a staggering 60%. It just goes to show you the traditional ways of doing things, they just aren't working for a lot of people.
And all of this leads to what we can basically call the home equity trap. You're equity rich on paper, but cash poor in reality. And the usual solutions just don't seem to fit what's happening in the economy right now.
Okay, so let's just dive right into the heart of this. The bottom line is, nobody wants to refinance their main mortgage. And I mean, why would you? Giving up a 3% rate for, say, a 7% rate just to pull out some cash, that is a really tough pill to swallow. And what that's done is it has effectively locked away trillions, with a T, trillions of dollars in home equity, keeping it just out of arm's reach.
So whenever there's a trap like this, someone's going to come along and try to build a key. New financial products are starting to pop up, and we're going to look at one specific example that's designed to solve this exact problem. All right, this product is called Equity Select, from a company called High Tech Lending. Now, it's what's known as a second-lien loan. All that means is it's a totally separate loan that sits behind your main mortgage. The huge advantage? Your original super low interest rate stays completely untouched. But the really key idea here is that it's designed to work like a credit card, which means more flexibility. Okay, so how in the world can a home loan work like a credit card? Well, it all comes down to one really important feature: the way you make your payments. And here it is, the key difference. A normal loan, you've got that fixed monthly payment. You're paying principal, you're paying interest every single month. But with this new model, you can make a way smaller payment, sometimes as little as 1% of the annualized balance. That is a massive change from how these loans usually work. So let's walk through the whole life of the loan. Step 1, you tap your equity, get your cash. Step 2, you make those really small, flexible monthly payments we just talked about. But here's the part you really got to pay attention to. Step 3, the rest of the balance, the big chunk, is all due in one final balloon payment, which for a lot of people will happen when they eventually sell their home down the road. So you're probably asking, how is it even possible to have such low monthly payments? Well, here's how it works. If your payment doesn't cover all the interest for that month, the leftover interest just gets tacked on to your total loan balance. Yeah, that means while you're making payments, your total debt can actually go up over time. It's a concept called negative amortization. Now, a product with this kind of unique structure, well, it's not going to be for everyone. It's really aimed at a very specific kind of borrower that the traditional banks often have to turn away. The perfect person for this kind of loan is someone whose income doesn't just show up in a neat little paycheck every 2 weeks. Think about self-employed people or salespeople who work on commission, even retirees on a fixed income. Their cash flow can be up and down, which makes it super hard to get approved for loans that demand a rigid, fixed payment every month. And hey, you don't have to take my word for it. Here's the CEO of the company, David Peskin, explaining the whole idea. He points out that traditional lenders turn these kinds of people away all the time, and that creates a big gap in the market for a product that can offer more flexibility. Of course, with any financial product, the devil is always in the details, right? So let's get into the nitty-gritty and break down the key terms and requirements for this specific loan. All right, looking at the requirements here, you're going to need a FICO score of at least 650. The interest rate is a little bit higher than a conventional loan, and that makes sense. It reflects the extra risk the lender is taking on with that flexible payment plan. Right now, it's only for your main home, your primary residence, and it's available in about 10 states, though they are planning to expand. So what does this all mean when we zoom out and look at the big picture? Is this just a niche product for a few people? Or could this be a sign of a much bigger change happening in the world of home lending? Well, the company's goals are definitely not small. They are aiming to be doing $100 million in these loans per month within the next year and a half.
That's a huge target, and it tells you they really believe there's a massive demand for this. And their strategy for hitting that goal is actually pretty clever. They aren't just marketing to us, the consumers. They're also teaming up with traditional banks and credit unions. They're offering this product as an option for all those customers that the banks would normally have to say no to because of their own strict rules. And that kind of leaves us with one last big question to chew on. In this new era of super high home values and people locked into these amazing low mortgage rates, is this the future? A new model that cares more about payment flexibility than a traditional paydown schedule, all to help borrowers who just don't fit into the usual box? It's a fascinating shift, and it's definitely something to watch.